welcome back. Episode 14 of the Pickers Market. Guys,
What's
how's
up,
it
dude?
going?
It's going well.
we just I don't know if it's going well for Keith. We just he just went on his little rant about stuff breaking in his house. So
Yes, appliances falling apart.
You got 15 years out of him, Gangle. 15 years.
But then you talk to some other people and they're like, "Oh, I've been, that are older. They've been in our house I've been in our house for 24 years, but then, we've had our appliances for like 30 years." I'm like, what?
Yeah.
I think anything over 10 seems
You've got
somewhat
your
reasonable.
money.
Really?
I think post 10, you got your money.
All right, but
You've
See,
earned it.
Still bitter,
just
though.
like what we talked about last week. Everything's an investment. Right?
Yeah.
So you got a good return on investment
Yeah, there you
for
go.
that one.
let's hope this market keeps going up.
Yeah.
Well, we'll get to that in a sec. $6 billion party recap was good.
It was a
There's-
blast.
Yeah,
Yeah. We had a
better
good
for
time.
some than others. I'm thinking.
This side of the table, I'm sure had a good time.
So for those of you who may not remember, I don't know if we really talked about
I don't think
it.
we talked about it.
So we had our $6 billion happy hour, I should say. And it was at Smash Park, which is the pickleball. They have pickleball and bags and all sorts of different,
Everything.
Yep.
Yeah.
pretty much everything
It's
there.
a little entertainment.
And somehow it ended up being Jeremy and Keith versus myself and David. And it didn't turn out too well. But
What? Well, for who?
you.
Let's define this.
wow,
I think Jeremy and I thought it was
wow.
fantastic.
Turned
Okay.
out great for a couple of us.
Here's my excuse on that is
Oh,
I was
boy.
about 8 games deep at that point.
You were
Oh.
winded from pickleball.
Oh man, it was hot. I was sweating, a few drinks deep too.
He got
Wow.
pickleball gassed, Gangle.
So
Mr.
well,
CrossFit over
and-
there is
and-
gassed from
It's-
pickleball.
it's not
it
right.
wasn't even like a best out of 3. It was just one game and done. So I think we're gonna have a little rematch.
I mean, Tyler, you're like 20, 30 years younger, and then David's fresh out of college.
Yeah. Receiver,
athlete,
yeah,
college
exactly.
receiver.
College athlete.
Hey, we had just gotten done with a couple of pretty intense games because
Mm-hmm.
we had some bets on the line for some of us on different areas of the.
Well, yeah. See, we had to let the minor leaguers work their way through to come up to
so
the majors.
We're already gassed. We're
I just assumed you were warmed up.
Yeah.
I came out completely cold.
And Jeremy, how often do you play pickleball?
That was my first time in 3 years. So
whatever.
you might have been warmed up. I was ice cold.
All right, the competitive side's going to come out next time.
Love it.
All right, so back to the markets. Thank you for that. So my kind of hot button for this week is the U.S. dollar. 'Cause
Yep.
I mean, we get gradual questions throughout the year about the U.S. dollar, but I feel like I've had a number of them over the last couple of weeks about what's going on. Is the dollar going away? That kind of thing. So I'm just curious, your guys' thoughts on the U.S. dollar currently. Like, is it going away? Is it still king?
I think the dollar is still king. I think I wrote about this almost 2 years ago in our market reflection. It's the same argument 2 years ago, and it's actually one of the baskets you look at is a DXY index, which is U.S. dollar versus other currencies, and that's actually at the time I think it was 104. I think right now it's 106. The higher the better for the U.S. dollar.
Sure.
There's times when you go back a couple decades it got as low as I think 75, 80. I think as high as maybe 115. So anything above 100 is above par. It's a strength of a dollar. So you hear a lot of arguments. I think it's easy for people to fearmonger that the U.S. dollar is going away. I think that's my biggest takeaway and these things are glacial anyway. Even if we lose some of our reserve currency, we're talking decades. I mean, again, like I just wrote this about 2 years ago. It's the same argument. And then if you go back in time, there was articles, 20 years ago as well saying the U.S. dollar is going.
I think we write it every 2 years.
Yeah.
Right. We write the same, I mean, pretty similar thing every 2 years. I always say, watch what people do when they get scared. And what do? They buy treasuries in dollars like there's nobody's business. The day I hear somebody start buying Chinese currency when they're scared or Bitcoin when they're scared, then I'll worry about cash being king and dollars being not king anymore. I always lean to that, is that when people want certainty, they're still coming back here. I don't know if that changes I don't know what changes that anytime
Well,
soon.
does BRICS change that. So BRICS, for those of you that may not know, is the main countries are Brazil, Russia,
I mean,
India, China, South Africa, right?
Yep.
And then this year they've actually had on, I think it was 5 different countries that they've added. Like, I believe Argentina denied them, which is kind of surprising because they had a change of presidential candidate. But like Iran, Egypt, Ethiopia, who else? UAE, Saudi Arabia, they have now joined. So
Okay.
it's getting bigger.
Mhm.
But again, I mean, those countries, not the main countries, but the other countries are very small as far as GDP and trade go, I would say.
Yeah.
So does BRICS change that? Do they continue to expand? Does that change the outlook on the US dollar?
I mean, if you look at the countries you just mentioned, especially Russia, China, I mean, those aren't typically democratic countries, right? I mean, I feel a lot of people across the world be like a little worried about, changing of leadership, and also, is your money really safe? Their property rights, they don't have the property rights that the U.S. has. So that's why it's hard to argue. I mean, yeah, that they could, but again, to Jeremy's point, those countries, I think, are a little bit more unstable than the U.S. U.S. certainly has its problems, right? I mean, the debt issue is certainly an
No
issue.
question.
So it's not a perfect situation, but we have elections, and obviously we're getting to that
Yep.
season, and it's going to get a little bit of funny season, but generally at the end of the day, they go smooth. There's a transition of power where some of these other countries, that's not the case. And all of a sudden you can see, a dictatorship, leave and go. And all of a sudden your currency gets inflated or deflated really quickly.
Yeah, I think from my side, like, these countries getting together kind of makes some sense to a certain extent about trading with each other.
Mhm.
And could that weaken the dollar over time? Sure. But then we're probably talking about 67% down to 61, right? I mean, those transaction elements. But if you're looking for quote unquote king, I would have a very, very, very difficult time saying that even a consortium of these groups would be able to offset the dollar for global transaction.
Yeah.
I mean, the euro was probably, I would say, would have been the closest one at, in history to saying this is something that could replace, because it's a consortium of nations that have been around for a very, very long period of time. And even that has not been terribly
Right.
smooth. You put these countries together and try to say this is going to be your global stable currency. Good luck. I don't see it.
Well, and I understand the viewpoint of like Russia or Iran, right? Part of it is they want to get around sanctions.
Yeah, you want to transact.
Right.
Yeah,
So
sure.
like I think the stat was 80% of Russian transactions were US dollars in
That high?
trade, right? And 20% were in
Yeah.
Russian rubles. Now it's flipped. So there's still 20% in US dollars, 80% is now in Russian currency or other currency, I should say. So I understand the fact from that is they're able to transact around US sanctions, which may or may not be a good thing. But regardless, they're still able to trade with other partners in other currencies without having to deal with the US dollar and the issues that may cause them to use the US dollar. So I get it from their viewpoint. But to your guys' point, so here's some stats. US dollar for a share of global foreign exchange reserves, 58%. Share of export invoicing, 54%. Share of foreign exchange transactions. This one blew me away.
That's high.
88%.
Yep. You know why? The other side is
Yeah,
saying,
that's
I want dollars.
Exactly. And so
to your rubles argument. That surprised me they even flipped it that much, because someone had to be willing to take on
Yeah.
that ruble side thing. That
My
seems-
guess is that's one very large other country.
Yeah.
that said,
Well,
we're okay with taking that.
it's China.
Yeah,
Right.
exactly.
The trade with China is they're trading with each other in their own currencies rather
exactly
than
right.
trading into US dollars to then transact that way. So that's been the big change for them.
Yep.
And the other argument that I have, and I want your guys' take on this, is whenever I get questions about BRICS, is they're going to start to use a different currency. And sure, maybe they will, but Russia's not going to want to use China's currency. China's not going to want to use India's currency. So that means that they have to come together and create their own currency like the euro, right? But who's going to be in charge of that? Who's going to be the central banker for that currency? China certainly doesn't want Russia to have a seat at the table. Russia certainly doesn't want to have India have a seat at the table, right? So I'm trying to find the argument to say that they can create a euro-like currency where there's a central bank that someone is governing it.
I agree with you 100%. I don't think they can, but maybe it's a board with each of them get representation, and then you elect a leader. But that easy doesn't work out. I mean, Euros is the one that could have possibly, kind of put a dent in the U.S. being the king dollar, but they haven't. And again, they're more friendly that all those countries together. But again, each country has their own government, and they got their own their own people who have their own ideas and their own economy, right? So that's why it's difficult to actually make it work. And I think the Euros had some success, but certainly hasn't been as good as what they thought it could have been.
Yeah, I with regard to those countries and putting together a consortium of currency, I would put a higher probability on digital currency being a transaction mechanism for those countries rather than individual. And this is, the ledger type, the true blockchain of what everybody said it was going to be. That's probably more likely than those countries getting together and building another currency.
Yeah.
Are either of those likely to offset the dollar? No. But I would say what's more likely would be a digital component of that, and saying this is, we'll use blockchain as our currency to transact amongst each other.
Right.
That way they don't have a central governing influence. They don't have a political influence on it. They circumvent that process via digital currency.
Yeah.
That I could see. Again, is that likely? Not really. And is it likely to offset the dollar strength anytime soon? Very, very, very not likely. So
yeah, I think the big takeaway though is what we're talking about. These are long periods of time, right?
Yeah,
so again, if you hear this fear mongering, we're talking decades, not months, right? The market can move pretty volatile in days and weeks and months, but the currency stuff is not, and that's just going to be these stats you show. If you looked at it last couple of years ago, it probably weren't a whole lot different. I mean, the U.S. You haven't talked about the debt. I mean, we have a pretty big. That's a sign.
Well, and that's I think part of the argument is the U.S. debt is getting out of control. You can make an argument both ways. Our GDP has grown in line with it somewhat. Obviously,
relatively,
debt to GDP has gone up, yes, but it hasn't been a dramatic amount. So there's still appetite, though, for our debt, which I think is the one thing that people miss is the U.S. can continue to put out as much debt as they want as long as there's appetite for it. And the stats show there's less than there was a few years, or I guess if you go back to like 2014, there's less appetite for it today than there was in 2014. But the U.S. Treasury market, I've got a couple more stats for you guys. The U.S. Treasury market trades $190 trillion a year, which
big
is
number.
It's an unfathomable number, right? I don't even know what that means.
I mean, the Treasury market itself, if you look at how much is the U.S. debt currently? Last year,
33, 34.
Last year, the market.
You got to keep going as you're talking.
Yeah, that's true.
Just going up.
I don't think we've crossed 35 yet.
I don't think so.
But it traded $190 trillion buying and selling, right? So it's a very active market. There's still appetite for U.S. Treasuries. Take German bonds, for example. That market traded $7 trillion.
Yeah.
And it only traded at 4x the size versus the U.S. market trading at about 7x the size.
Yeah.
So there's a lot of appetite still for the U.S. dollar, regardless of where our national debt is at. And when that starts to dwindle, then I think we have an issue. But as long as the appetite is there, in my opinion, as long as the appetite is there, politicians are going to just say, continue to print it.
Oh, absolutely.
Yeah,
so,
yeah.
I mean, the general, I don't care, Democrat or Republican, the biggest thing they do together is kick the can down the road, right?
Yeah.
They're not going to do anything until their hair is on fire. So from that side, as long as they can continue to issue debt and there's still people swallowing it up, probably not going to do a whole heck of a lot with regard to, I don't expect the debt to GDP number to get significantly better anytime soon. I don't know if that's a hot take,
Not
but
with interest payments.
I just
going
don't
up.
see how that happens.
I mean, if rates come down, that would be the one offset that
Yeah.
gets a little bit of improvement. But talking about, I mean, you talk about the German market. Remember,
But interest rate is just, I mean, that's the expense, right?
Yep.
That's the expense of holding the debt.
Yeah.
Are they actually going to bring the debt down?
No.
And
no.
are they going to bring, or is GDP going to outgrow debt? I don't know. I don't see that happening.
Just your interest payments would be less on a smaller.
Well,
interest
yeah,
rates, right?
for sure.
Here's another stat. Sorry, stats guy. last year, or so if we look at what the interest payments were on US debt in June of
Mhm.
this year, it was up 24% from the same time last year, which is pretty crazy to me.
Yeah, especially when you remember we talked just a couple weeks ago about the housing market. What going from 3% to 7%. Imagine now increasing by 24%. So that's certainly taking a bigger bite out of your overall budget.
So to your point, I think debt outpaces GDP, and at some point, I think we're going to have an issue if we don't try to control it.
Yeah, I mean, well, and that's what I'm saying.
Brings rates back down to
That's
zero.
what I mean. The Fed,
Well,
that's where
exactly, but that's not going to stop. I think honestly, they'll probably issue more right at that point because interest rate isn't as killer and it isn't as costly, and it's like, oh well, okay, well, we can do some spending projects because it's now cheaper. I think one of the things we didn't do was extend the debt long enough when rates were basically zero.
Yeah,
and
I was just going to
throw the 100-year bond out there.
Say, is that a hot take to say that we royally screwed up and not issuing a 100-year bond at a 0.5% interest rate?
Yeah, looking back, certainly isn't. I mean, you remember back then, German bonds were actually negative yielding, right? So I mean, you actually had to pay to someone to hold your money.
That's just straight lunacy.
That's lunacy. So
buy
that's
a German bond for $1,000, you get
$990 back. Yeah. Thanks, man.
Thanks.
Yeah, that sounds like a great investment.
All right, enough of that. I don't know how much people enjoy talking about the US dollar, but I just thought it was a hot topic. So I want to switch gears because I think, and it's happening today a little bit, value versus growth. Is the tide changing? Is the tide going out on growth? And
I'll let the value guy start.
You want me to start there? I think the amount of differential just got so massively wide, right? I mean, basically you've been driven by 7 stocks, right? And so those 7 stocks became inordinately big, whether it's value versus growth as a pivot or just those not driving the market anymore. I think that's probably your bigger rotation. I don't think anybody's coming into the market and saying right now, value stocks are the way, I mean, people will say that, but I just think it's more of a widening out. Again, from this process. And also, again, as you start to rotate these going forward, I mean, it was top 10 were 37%, right?
Right.
So you get 37% of that index. If that turns over, the other 490 probably just look good just in general from there. So I don't know how much of it is just pure rotation and saying growth stocks are dead, value stocks, it's their time to shine. I think this stuff can happen fast and can fluctuate fast, whether it's a complete reversal of that change on a sustainable basis over for. I'm a little less convinced of that.
Sure.
But could it be another 10, 15, 20%? Sure. Just to kind of compress that difference of spread that has happened here recently.
Keith?
Yeah, no, I don't disagree. I do think growth over long periods of time tends to outperform value, but we've seen such a big discrepancy between those top 10 names are considered growth names, right?
Almost all.
37% of those names. It wouldn't be surprising me if they pull back a little bit, and generally speaking, I've been in my portfolios taking them down a little bit. And to Jeremy's point, it's not even just growth versus value. I think it's those 10 versus maybe the other 493.
That's what I think it is.
Which has value in it.
Yeah.
The bigger discrepancy was happening last week, which I think is is more shocking, is the small cap trade. Because that's the same thing. People have been arguing for value.
Remember a couple weeks ago?
Yeah.
What the calls were?
Small cap?
Yeah.
Okay.
Hey,
there's my win.
Are you selling? Okay, then are you selling that right now? Are you done with that?
No, I'm holding.
That train's okay. You're still on that train?
Yeah.
Yeah. I mean, so going to your stats fact, it's for the last 5 days, the Russell's up 12%, the small cap index. So in 5 days, I think it was like I read this morning, a 6 standard deviation move. So it's great. I mean, so now you've gone from huge, growth names putting up good numbers, upsiding, valuation getting a little bit stretched to now all of a sudden you get a 12% move in an index that's been underperforming. Again, it's been underperforming for a few years. So at some point in time, it will play catch up, but to move up 12% in 5 days on really no news, like sometimes when the markets move on a mega cap name, right? So they're so big, Apple 7%, Nvidia 7%, Microsoft 7%. If they have good news, that alone could move the market. Now to have these, it's actually been, if you look at, it's been really small cap. I saw this morning, there's a few names are up, quite a few of these in the index are up 50%. And it's like, they don't have any earnings. It's just, it's a complete
pure rotation.
It's I don't know if it's program trading going to an ETF or just that buying a basket.
Part of it was last week, Powell testified in front of Congress, and basically said that they're very pleased with how well inflation has come down. And I think there was also the stat, if you strip out housing out of CPI, I think CPI would have been like 1.8%, something like
Okay.
that. So I think people are maybe rotating into things that would ahead of a rate cut that would work if Powell does cut rates twice this year. Because now I think the market's projecting one in September, one in December. And you could argue maybe
I think actually the
almost
predominant is
three
three now.
Yeah.
Is it?
Yeah, I think it just cleared. Yeah, by
One-
the end of the year, we're the most likely
So they're
scenario is
going
3 cuts.
So they're going September, November, December. Because I just
Assuming,
looked
yeah.
yesterday that
July's almost
July
none.
was
Yeah,
none.
July
Yeah.
is 99% that we don't move.
So I think that was maybe that sparked the rotation, and then maybe you get the FOMO momentum type stuff.
Well, yeah,
People just start piling
go ahead.
into it.
The thing about so you said it was a 6 standard deviation event. Small caps are still underperforming this year, right? Compared to large caps.
Yeah.
It took a 6 standard deviation event to even get that, and they haven't even flipped from that. You know, I mean, that's the level of disparity that was the difference for the longer period of time, right? Is that we've been talking about this for a while. It happens fast and can do those things. Whether it's sustainable or not, I wouldn't put an aggressive amount toward that.
Yeah.
Again, putting my little cautious hat on here to a certain extent is that I always say that, rate cuts with growth are a rarity. I mean, it's possible. Could we perfectly land that plane? Sure. I think at some point people are going to start getting a little worried about economic growth rather than price growth. I think honestly, that's probably your bigger question in the second half is, can we continue to grow rather than, man, these prices are out of hand? In that case, I don't know how well small caps work, even in a rate cutting type of scenario.
Well, actually, you saw the email. The first recession call that I've seen.
Oh, it came out? I haven't seen it yet.
Yep. End of 24 into middle of 25. So I saw the first one. First one's out.
Yep.
So people are starting to talk about slow. I don't think we're slowing to the point where we're going to have a recession.
Yeah.
But slowing nonetheless.
Yeah, I think we're slowing, but to your point,
we're not contracting,
not recessionary levels.
Yeah.
And you see it. We're just in the beginning of earnings season. I'm sure the next couple podcasts we'll cover it as we go through earnings.
Sure.
It's been definitely a mixed bag. I think it's been okay so far. I mean, there's some banks have been okay, and there's been some consumer names that haven't been that great. There's been some healthcare names that have been fine, but there hasn't been really any standouts yet. And that's why this move that we talk growth versus value, or large versus small, it's people are doing a little bit of a catch-up trade here, and the rubber's going to meet the road here in the next couple of weeks when all these companies start reporting, right?
Especially the big guys, right? The big tech names and all that, the Amazons, Microsofts, Apples of the world. What do they look like? Can they continue to blow out? Is NVIDIA going to continue to blow out? That the rubber is going to meet the road.
Yes.
That'll be a big determinant of what our future looks
like.
Yeah,
if those big guys have any, obviously they need to beat their quarters, but they're going to have to beat and guide up. That's where that growth trade, if they don't guide up, then those guys are the growth leaders that will sell off, and then you could see a serious rotation into value names or other 493.
I mean, those names could have a 15, their multiples could go down by 5 times, right? It could go
5 turns,
from low 30s to mid 20s, and they'd still be higher than long-term averages. So from that perspective, is like you could have a valuation correction even if their earnings stay relatively okay. Now, if they're blowing them out, I really have a hard time saying that they're going to massively correct in a time when they're just blowing out numbers.
Yeah.
But if they come in line, then the valuation comes down to close to normalized levels, then that rotation could actually continue for a while.
We've seen that before, right? Meta was that 2 years ago, was down to 16 times earnings, right? Still with 20% plus growth. So it certainly can happen.
Yep.
One more question for you guys on that. Do you guys think that, so we always talk about rate cuts being better for growth companies and small cap companies, obviously. Do you think this time might be a little different now that we've had such a run up in growth names and technology names, that a rate cut is going to help more on the value camp? Because now you might have people driving into REITs again. If interest rates go down, you might have people driving into UTs again because they can get better yield on utilities rather than on the short-term bonds right now. So do you think that a rate cut might be more beneficial for value today?
Those names for sure. The problem is value 20% financials, and rate cuts aren't historically terrific for them all that much. Because usually, again, rate cuts come with economic slowing and people worry about financial. So being that even those in the value sector, REITs and UTs are like half the size of what financials are. So if you're just saying, I'm going to buy a value ETF because you want to be careful about that, picking and choosing your battles on that. Yeah, you could see that happen.
All right. Spaghetti Wall. We are in the midst of Amazon Prime Day. So does anybody I asked you this the other day, do you have your cart loaded up, ready to go? Well, I guess first day was yesterday and second day is today, but do you guys buy anything yet?
I haven't, but my daughter informed me. She goes, "Hey, Dad, it's Amazon Prime Day. I need a new iPad cover case or whatever it was, this and that." I'm like, "Oh, okay." She goes, "It's Prime Day." So I'm like,
So
"Okay, what is?" I'm like,
better
"What are
buy
we
it
saving?
today.
Like $5 basically?" I'm surprised she even called instead of just ordering on the credit card, and then I get the statement afterwards. But she seemed to point out the fact that we're getting a discount.
That was greasing the skids for you, wasn't it? It's like it's
like,
Prime
okay.
Day, by the way. No. But I have such an addiction to Amazon anyway. Every day is Prime Day for Jeremy.
Yeah, I agree with Jeremy. I'm on the same boat. If we want it, we need it.
I buy it.
We buy it. And
what I find interesting though is that other companies are now having to do their own deals during Prime Day.
Yeah.
Just to try to get the business back.
Well, the accelerated shopping. I mean, it's a compressed time frame where people are looking for deals and they're going to go out and buy stuff. And so it makes sense to me. It's like, why wouldn't Walmart, who is basically your number one competitor, why wouldn't they come out and say, hey, we've got this too? Yeah. We can do this too. Since you're already looking and you're already shopping and you've already got your list together, why not? Hey, here's some other stuff that you might want to throw on that list. Yeah. So I think that's natural part of competitive landscape. I mean, Black Friday, I don't know when that became a thing, but all of a sudden every one of them did it, right? The Memorial Day sales of mattresses and those Labor kinds Day, of things, Memorial right? Day, yeah. Everybody just kind of follows suit of everybody else. So now that Prime Day's become so big, what is like 14, 15 billion we were talking about today? 10% growth year over year. That's not too bad for the consumer. I think that's actually a decent sign. I just think, it makes perfect sense for them to follow suit and try to steal some of their sales.
Yeah. Have you done any shopping yet, or you're probably a little bit more on the watching the deals?
Yeah, we have a few things ready to buy, but we haven't pulled the trigger yet.
Personal or kid stuff?
Kid stuff.
Yeah, that's what I figured.
Well, we're trying to figure out, like, is it really worth buying everything that we need right now when we don't actually need it?
Well, you got the big, you got a big new house. You got to fill it up, man.
Even if it's like 5% off, like, does that really help us? I don't know.
Well, it'll help for next time your washer dryer goes out.
Oh, don't forget the stove too.
So you mentioned the 14 billion up 10%. Do you think this hinders the argument that consumers are feeling stretched?
No, they're picking and choosing.
Okay,
a little bit more. I mean, you saw it in the restaurants, right? The restaurants aren't. We'll see what their actual results are, but certainly the stock market doesn't feel like people are spending as much in restaurants as they were before. We'll see. I think picking and choosing. I don't think the consumer is gone, right? It's not a full on pullback, but it's also not 2021 where we were like, hey, let's go outside and actually do stuff and spend on everything we can because we've just been hoarding cash for this whole time. We're not there anymore. This is much more. I pick and choose my battles. I use Prime Day to buy some of that stuff that's been on my wish list for a while. Yep. This is more normal. What we've experienced from 21 and 22, I would say, was abnormal, right? It was pent up demand that lasted for a very, very long period of time. I think we're now in more normal territory. I don't think we're in broad contraction territory yet, just simply because the job market is still relatively strong. I know it's getting unemployment rate is ticking up a little bit. But it's not. I mean, we're still at 4.1%. That's incredibly low compared to history. Most people still have jobs that want jobs and need jobs. As a result of that, I think they're going to continue to spend until that gets incrementally worse.
Yeah, I think that's well said. I think exactly we had consumers going way overboard spending on everything they wanted to. Now I think it's just more normal, but it is slower. I mean, restaurants are, for example, the commodity costs have been going up for inflation the last couple of years. Labor costs are going up. Things are slowing, so instead of people maybe eating out 3 times a week, they're eating out twice or something like that. And I think that's what people used to do. And then, there's certain companies, retailers discount one, Five Below. Mm-hmm. They've had some issues, and all of a sudden their consumer slowing. They get stuff
Yeah.
they import from China. So different things like that. And so I think people are being airlines, right? Delta came out last week, reported a number, but they're talking about too much capacity. The reason it's too much capacity is because the demand was so high. So I think that overall demand is stepping down, but it's still healthy.
Mhm.
So, but I mean, if you were planning on this robust,
The excess is
the
coming out.
excess, yeah,
Oh,
it's
yeah.
coming out. So if you were planning as a company for that excess, I think that's where they're sorely disappointed. So I think the management teams that are doing a better job, Walmart, Costco, I think on the flip side,
Absolutely.
they've done a fantastic job of managing their inventory, keeping prices relatively low relative to their inflation. I think those stocks are rewarded. And so that's where, us as investment management team, we need to.
Did you see that your Costco membership's going up $5 or $10
10
depending on your tier?
Yeah. So of course we go.
You got
I
to
go.
keep those hot dog prices
Yeah.
flat though.
The hot dog prices are flat, and I was just there yesterday again. Spent a lot, but our executive went up 10, the non-executive went up 5, and it's like $10 for the dollar amount I spend in a year. That's like a rounding here.
Gangle is still the only one that I know that lives still in oil embargo days because he waits in line for gas.
I do stop there but twice a week. I drive a lot, so
Twice a week you have to fill up.
yeah,
That
using my
tank?
vehicle.
Oh,
Yeah.
man.
It's
All right.
not cheap to keep the program running.
Well, on that note, we'll end the show there. So like and subscribe if you like our stuff, and we'll see you next week.